Hello traders, this is Blake Morrow. You are listening to the week ahead video for April 25th, 2021. I hope you guys and gals are having a great weekend. Now, before I get into, we have an exciting week. I think we're going to have an exciting week coming up. But before I get into that, let me just say, if you haven't tried out ForexAnalytix, please do so. It's only $1 for 10 days. It's only $1 for 10 days to try it out. That's it. Download the mobile app. Doesn't matter what version you're using. You could use the light version, which is only $19 a month, or you can use the premium version, which is $119 a month, but you get the mobile app with either one. So download the mobile app. With the premium version, you will get the advanced analysis and you will also get the chat room. All right. But you can listen to all the webinars that we do with the with either version. So anyway, make sure you try out ForexAnalytix, and I'd appreciate it. Yeah, there you go. So that's it. Okay. So what we're going to do is we're going to talk about what we're looking for going into this next week. So as I had mentioned to you guys, next week is going to be I think probably a pivotal week. One of the reasons why I think it's going to be so pivotal is that we do have the FOMC statement this next week. Okay. Now, most people are thinking that this is going to be a very uneventful FOMC. I was trying to pull this up at the same time, and I'm going to come back to that chart just in a second. People think that this is going to be a fairly uneventful FOMC, and it probably will be. I mean, let's face it. The Fed chairman's been dovish. He's actually surprised many people by continuously being dovish. He's very persistent dove. But as a result, everybody's expecting, okay, we're going to have a dovish FOMC, rate decision and press conference with Jay Powell. Most people think that as we go into June might be a little bit different, as we have, most of the United States will be vaccinated at that point. Jobs data continues to improve. Maybe the inflation data that's been more inflated. That was actually a very poor dad joke. Sorry. If you're not a dad, or if you become a dad, you'll whip out dad jokes from time to time, right? So you get inflation numbers. Did you get it? Did you get it? Okay. Anyway, but as we head into June, maybe some of the inflation data may not be so inflated. I did it again. You guys are cracking me up. But the data might actually ease off a little bit, and maybe the Fed chairman at that point in time in June becomes a little bit more hawkish, and we start talking about tapering bond purchase and whatnot. That's what the market is thinking. So the market's not thinking that we're going to get that this week. However, I want to point out that the S&P continues to be right at the 161% extension of the post-COVID lockdown move. So you take the highs pre-COVID lockdown, post-COVID lockdown, 161% extension. We're there. And that's important to know, that we're, maintaining our gains, and we're right at these, I think, massive resistance. One of the things I was completely wrong about last week is my assessment thinking that the sell-off in Bitcoin, selling off below 57,000, the channel support, was going to influence negatively the asset markets, like equity markets, like S&P, NASDAQ. It really hasn't. I mean, it hasn't shaken the the tree of the equity markets whatsoever. But maybe, the slide in cryptocurrencies will eventually, grab the attention of equity markets. I don't know. It doesn't seem like it. It hasn't now, so I can't imagine it's going to do it anytime in the near future. I think the only thing that's really going to influence the equity markets would be a change in tone with the Fed. So let me reiterate. Do I think that the Fed chairman is going to change his tune at all regarding becoming a little bit more dovish or excuse me, more hawkish. I don't believe so. But then again, I am self-proclaimed probably the worst Fed watcher in the world. I'm just kidding, but I'm really not that good when it comes to trying to figure out what the Fed's going to do. I'm better on reacting, right? And so one of the things I want to point out is the S&P seasonality. Now, when you look at the markets and where they've been at, and I'm gonna delete that for a second. Let's go back over to the S&P. So the S&P continues to rally, and I'm just obviously looking at the S&P. We continue to hit new highs. Relative strength is very divergent, and that's always a concern when you're talking markets. You got a rise in price. S&P, or excuse me, relative strength continues to diverge. It goes the other direction, so it's actually moving lower as prices are moving higher. That doesn't bode well for the markets. It means that this rally is occurring on less strength than previously, and that's kind of like when you look at volume. When stocks go higher on lower volume, that's typically not a confirmation that these highs are going to hold. So when you're seeing that, you got to be a little careful. And we know that we're going into a seasonally tough time for the market. Now, you might look at this chart and say, well, Blake, look, and this is a chart I found in a piece of analysis that I was reading this weekend, but I think it's pretty good. Whoops. Yeah, we do it like this. Here we go. Okay. So you can see that over the May, since this is 1989, May, is still a positive month, but June, August, September typically are weaker months on average. Obviously July is like kind of a standout. You get a little, reprieve in the summer, I guess. But overall, you can see that typically we're going to have a little bit rockier time in equities come the summer. Now, so you get that old adage, sell in May, go away. Well, we have several weeks of May before, we hit June. So theoretically, stocks could continue to go higher. I'm not going to argue that point. I'm just going to say that we are typically in a period or getting into a period where stocks might be, have a tougher time moving higher. Now, one of the other things that I do want to point out is that we've moved so far over the course of this year, since 13, 14 months ago, since the lows, that maybe you start to see a little bit of profit taking even ahead of the quote unquote sell in May, go away. But the only thing that's really going to influence that, I think, is going to be the Fed this week. Now, I want to talk a little bit about currencies, obviously. But I want to point out that the euro dollar is right up against resistance. Last week we were talking about, if you were listening to the F.A.C.E webinar, we were talking about how important the support was at 120 or 119.90, if you remember specifically. It was really channel support, and we were looking for a move back up to 121 or the 618 retracement of this move. Well, the euro dollar is approaching actually 121. We closed at 121. Also, trendline resistance comes just above that. So I wouldn't be surprised if we trade, to 121 and a quarter. But the question is, will we break? And if we do break, the euro dollar could, make a move for 122. All right. So that's something that we need to be thinking about. That's the 78% retracement of the highs of this year to the lows. Now, also keep in mind that the dollar, and I'm going to point out the dollar index here. This is the dollar index coming out of a descending wedge, or an ascending wedge. It's attacking the 618 retracement of this entire move of 2021. But I'm going to take you back to, this is the end of 2020. And you have to think that at the end of 2020, the market was aggressively bearish the dollar, calling that the trade of 2021, that we were going to get massive dollar weakness. The euro is going to 140, all these different forecasts. And then what happened the first quarter? The dollar reversed course, right? The dollar bounced like a bat out of hell. Now, I personally think that we are in a consolidation phase in the dollar, but we have to also take into account that the dollar tends to act better when stocks move lower. So as more of a safe haven type of currency. So I don't know where I think the dollar is going to be influenced more by the Fed this week. And I also think that the dollar is going to be influenced by equities. So we have to pay really close attention to what's happening in the stock market and what the Fed does this week. And we should also not dismiss the fact that we do have advanced GDP numbers coming out this week. We also have inflation data coming out. I think we have inflation data coming out this week as well. We have Canadian retail sales. We have inflation data coming out of Australia. And then, actually, we don't have inflation data this week. I was thinking we did. I had to go back and look at the calendar. And by the way, if you want to see the calendar of what's coming up next, it's right here. I have it on another screen as I'm talking. So, but anyway, going back to what I was saying about the dollar, I think the dollar is going to be really influenced by what happens in equities and what happens with the Fed on Wednesday. Now, there's one chart I want to bring up, one last chart I want to bring up for you. But before I do so, let me just ask you guys for a favor. If you guys have found this video to be beneficial to you going into this next week, please give us a thumbs up. I really appreciate it. And I really appreciate you guys, if you're watching us on YouTube, that you give us a thumbs up and you comment in the comment section. It actually helps with our YouTube algorithms, the more interactions that we have. So if you get on there and you're like, hey, Blake, I think the dollar is going to get destroyed this week and here's why. And, I'll try to get in there and have a conversation with you as well. But that really helps. And if you like what we're doing, our team really enjoys those thumbs up. I mean, we do these videos and we've been doing these videos for the last 5 years for you guys every weekend. And I hope you appreciate them. If you do, give us a like, give us a share. You see us on LinkedIn, share the video, subscribe to our channel. Subscribe to the YouTube channel. This way you'll never miss any of our videos that we put out throughout the week. Even if they're after the fact, you can still listen in. So anyway, guys, thank you so much for your continued support. I really appreciate you. I really do. All right, let's talk about the last chart that I wanted to discuss. Now, as we were talking about the S&P, so the S&P is up, obviously up against some pretty gnarly resistance. I still think that the S&P could get above 4,200, maybe take a stab higher. But if the Fed continues to be dovish as the market is expecting, maybe we even go higher than that. The Fed goes, whoo, thank goodness we're going to get another dovish Fed Chairman Powell. Well, you know what chart we need to be looking at? We need to be looking at the euro yen. So this was one of the charts of the day on, I want to say, the Wednesday or Thursday of last week. It's if you go to our blog, it's free. This is my chart of the day. I want to show you a few characteristics of this chart. First and foremost, this is the daily chart, and you can see the relative strength is very divergent. Now, just because it's divergent doesn't mean we can't break out higher in price, and relative strength can break out as well. That can definitely happen. So let me delete that, and let's delete that. But when you're looking at an ascending wedge, it is actually a reversal pattern typically. There's more of a chance of it becoming a reversal pattern than actually a continuation pattern. Now, what I mean by that is when you see an ascending wedge, that means the highs are still going. The highs are, higher, but they're moving up at a slower rate than the lows are. You can see the lows, we have higher lows, but the lows are actually moving up higher or moving up quicker than the highs. That wedge typically will play out to the downside, or I'd say more times than not. So if I had to throw a number on it, I'd say it's 60% of the time, 65% of the time. Based on my 25 years of looking at charts, based on my experience, I would say 65% of the time we move lower. But there still is that outside shot that, and I say outside shot, like that 35, 40% of the time then we can move higher. Now, the reason why this is important is because we have a weekly triangle that is in development, and a break above this triangle resistance could be very, very bullish for the euro yen. The flip side to that is if for some reason equity markets reverse and we start to see a move lower in stocks because, let's say, the Fed is a little bit more hawkish, then the euro yen reversing at these levels could be quite bearish as well. So I think we have a good setup. I don't want to be bearish the euro yen unless we get a break below 129 or this trend line right here. But hopefully this idea is something that it could be actionable for you guys going into this next week, and it will be something that you'll be paying attention to, because it's something that I will be paying attention to going into this next week. So, obviously there's a lot of other things happening this next week. Like I mentioned, we have GDP numbers, we have pending home sales in the US, we have the FOMC, we have retail sales out of Canada. Christine Lagarde from the ECB is speaking next week. We have Aussie CPI data, Wednesday morning in Australia. That would be Tuesday afternoon in the US. So there's a lot happening. So make sure you tune in to our F.A.C.E webinars throughout the course of the week. And because my opinion on things can change, and they will. If you're only watching the Sunday videos, you're not getting the full story, because my opinion, or the opinions of my teammates and team members of ForexAnalytix, that does change, as we go through our week. So there's our team right here. So guys and gals, I hope you enjoyed today's video, and I hope you enjoy the remainder of your weekend. And I will see you on the F.A.C.E webinar first thing Monday morning. My name is Blake Morrow with ForexAnalytix. Have a great weekend. Talk to you soon.